Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. Microsoft narrowly avoided an 8-week losing streak, closing up 0.7% for the week at $391.26, despite being down 7% for the year. The last similar slump was in 2008 during the financial crisis. Concerns over tariffs and cost-cutting have weighed on the stock, which is down 16% from its July 2024 high. While Microsoft remains a key player in AI with its OpenAI stake and Azure investments, competition is rising from Amazon, Google, and startups like Wiz, which Google is acquiring for $32 billion. MSFT Weekly Chart. Weighed down by losses this year, Microsoft has reached the $385 level, which has transitioned from resistance to strong support. While the decline may pause temporarily, it's best to wait until the end of Q1 for further confirmation. Bitcoin. Bo Hines, a former football player and two-time congressional candidate, is now a key figure in President Donald Trump's crypto strategy as the executive director of the Presidential Council of Advisors for Digital Assets. Despite having no professional crypto background, he has been tasked with shaping national policy under AI and crypto czar David Sachs. Hines and Sachs are working to rapidly overhaul crypto regulation, with a focus on dismantling Operation Choke Point 2.0, which they see as a crackdown on digital asset firms. In the near term, Bitcoin price movements will likely hinge on concrete policy announcements and legislative developments. Investors are watching for specific actions from the Treasury Department and financial regulators that could clarify the administration's stance on stable coins, exchange oversight, and institutional adoption. BTC/USD 4-hour time frame. After pulling back from its all-time high of $108,000, Bitcoin has formed a bearish continuation pattern. The $78,000 level serves as minor support, while $85,000 acts as a key confirmation zone, determining whether the price resumes its uptrend or extends the downtrend. U.S. crude oil futures have fallen 14% since Trump took office, as the market factors in his push for increased domestic oil and gas production. Energy Secretary Chris Wright says this has led to lower prices for oil, gasoline, and heating fuels, benefiting consumers. However, Trump's tariffs and OPEC policies have created volatility, with WTI hitting a low of $65.22 on March 5th after new 25% tariffs on Canada and Mexico. OPEC Plus plans to boost production in April, adding to oversupply concerns. Geopolitical tensions are adding uncertainty. WTI rose to $67.11 after Trump's airstrikes on the Houthis and threats against Iran, an OPEC member, which could impact global oil supply. WTI/USD Weekly Chart. Oil has strong support at $66 per barrel, marking a key demand zone for buyers over the past 2 years. The price is likely to rebound, with a potential rally towards $76 within the next 2 to 4 weeks, making this a favorable buying opportunity. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.